Good morning, traders. Today is December 17th. Time is 12:19 a.m. I'm making this installation on the Euro USD. First of all, I'd like to thank you all my subscribers and my viewer, and I'd like you to click the subscribe button and the like button at the bottom of the video when you're watching this video. Massive content coming your way. And thank you very much. First of all, I'd like to say with a disclaimer again, this is meant for educational purposes and any demonstration will be on a demo account, and this does not mean by any means that you should go and open up a live account and put in funds for it. That out of the way, I'll be talking about the news today. Today we've seen a lot of news on the Eurozone. First of all, you will notice some bulls here. 2 bulls mean medium impact news, 1 bull mean low impact news, and 3 bulls mean high impact news, meaning that it impacts the currencies more. Well, I only keep my news to medium impact and high impact. Like I said, I don't trade the news, but I use the news to guide my thought process in making trading decisions. And you're gonna see how I do that today. So early morning, the New York Open, which is 9:30 my time, the German manufacturer PMI came out. Germany is one of the largest economy in the Eurozone, in fact, even the largest. And the actual for the Germany manufacturing PMI this month came at 58.61, better than the forecasted, better than the consensus estimate, which is 56.4. And you see it's shaded green, meaning it is good, bullish for the Eurozone. And we also see a lot of bullish news for the Eurozone coming out. And what about the US dollar? What news was coming out? The opening of the New York Open, we see that the correlated sales was coming bad for them. Interest rate is like a tool that is used to measure or to stabilize, that the Fed used to stabilize an economy. And if you see the actual comes at 0.25, just same with the forecasted and the previous. It's just a tool that the Federal Reserve used to manage the economy, manage inflation. They work hand in hand, so that when there is less money, they try to pump out money by increasing interest rates so that people can have money. And when there is less money, more money, they try to increase interest rate so that they can control it. So it's just basically a tool. In my next videos, I'll hopefully be talking more about the interest rates. So we see that the Eurozone during the London Open had a lot of bullish news, and those bullish news, we're going to just come to the chart in a moment to see how it affected the chart. So it was better than the MR December. So let's go to discuss about this equal highs, these places. In the retail mindset, they will call it a tweezer top. So we see that is at the end of your uptrend, so it shows that downtrend is ensuing, and we see this bull bearish candle coming in, and one might say, oh, it's going on the downtrend. I think I told in my last previous video that this will probably pull back because we've seen such an uptrust, and it is always right to expect a pullback. Attracted to these points here. And let's see how that finally played out. Let me drop down to the 15 minutes time frame and zoom out a little bit so we can get a clearer picture. So if you notice, this is the tweezer top that I mentioned the other time. These 2 places are the tweezer top. And let's see, like I said the last time, price is magnetized towards that point. So about some few days earlier, we see this consolidation up here, and we see the way the price bounce off this trend line that I drew here. Like I said, I don't use a trend line to trade. I only use trend lines to guide my thought process, to see where the orders are stacked up. Like I said, there are a lot of stop losses here above the tweezer top, and same thing was happening here, same phenomenon. You can see a micro double tap here. And the retail mindset, what you are taught in as a beginner in first, is that when you see this on the third touch, you sell, and that third touch did happen here. But if you did sell, what would have happened to you? You would have gotten a little bit of profit, then probably your stop loss would be 5 pips or 10 pips above here. What was it done? What was done to it? It was raided. Then it came back below the trend line again, or what we call the support. Then it did again, another phenomenon, 1, 2. On the third touch again, what does it do? Then, you see, it came a little bit down, then tap it out a little bit. It did it again, 1, 2, the third one, tap it and bust through it a little bit again. Then did it again. Then probably at the retail mindset where I say, oh no, I think this is a breakout. It's about to buy. Then you want to change your position. Then you change it to a buy. What does it do again? Probably place your stop losses here or here or here. It doesn't matter. It does come here and take the stop losses here and move through up again, taking the stop losses that have been lying down here, which I outlined in my previous video about a week ago. And what does it do? Immediately it takes out the stop loss. It breaks down to take the stop losses here and stop losses here, and it stops here. So the news that was released by 9, the German PMI was released here, and it was that move that took liquidity above those double tap up at the Twitter top. And just after the New York session has been opened, we see as the news roll in for the dollar, although the first 2 were medium impact and were bad for the dollar, but consequently we see when the interest rate and the FOMC meetings came out, and also the Q&A section that Jerome Powell was having, you see how the market regain itself, dollar regain itself and drive the market lower. Like I said, the news is an excuse to do what? Well, after market broke down just above this psychological level, 122 psychological level, like I used in my Aussie yen analysis, if it closed above with such an uptrust, the expecting it continues in that direction for a while. Although there are also other factors that we're going to take in place or take into consideration when we want to make that decision, which I'll also be revealing in my next video, so you need to subscribe and stay tuned for more information. So like I said, the news was an excuse to do what? Let's zoom out. There's another phenomenon like what I had discussed just now that has happened again. I would like to give you 5 seconds to pause the video and try to find out what that phenomenon is. Some of you I know will not pause the video, those of you who watched it to this point. Well, notice what that phenomenon is again. Just below here, what's happening again? Somewhat like a resistor. Now, not just double bottom or equal lows. We see that it is 3 times. So the market will be magnetized towards this place, because there are stop losses below there. That is how the market works. This is an industry. Everybody wants to make money. You want to make money as a retreat trader. The market makers too want to make money. So they are going where the liquidity is much, where they can make more money. That's where they go to. So smart trader or institutional trader ride the trend down there. So the market's Euro-USD is likely to go down to clear up this liquidity just below these lows, just below those lows. But market is always right. Remember, always be a reactive trader rather than a predictive trader. React with the market. Do not predict where the market is about to go. React with it. Have a clear-cut vision. Have a clear-cut plan that is outlined, that you stick to it. If it ends in loss, you know how to manage your losses with good risk management. And if it ends in profit, then how to let your profits run. So that's it for today. Thank you, traders. Till we meet again. God bless you all.